2022 has just started. The crypto market has started the year with relatively negative news. Over the last few days, the market has been registering a dip that may get some investors worried. As of January 24th, the market was down 7.66%, an indicator of the turbulent times that the market is going through and the characteristic volatility associated with cryptocurrency. So what is the biggest reason for the huge crypto dip being experienced? Hello, welcome back to the channel. Make yourself comfortable as we break down all the information on the causes of the huge crypto dip that we are experiencing at the moment. By mid-January, Bitcoin and other leading cryptocurrencies registered major drops in their prices after investors initiated large-scale dumping of mining equipment. To give you a perspective of how big this drop is, Bitcoin has fallen by 6.33%, Ethereum by 12.2%, Binance Coin by 10.1%, Cardano by 12.8%, and Solana by 18.4%. In January, Bitcoin registered its lowest price since August 2021. The largest cryptocurrency by market capitalization dropped below $40,000 to trade at $38,378 on January 21st. It may be more bad news for Bitcoin investors because crypto analysts predict a further decline in the prices of the coin. According to the senior market analyst at Oanda, Edward Moya, investors should not expect much support for Bitcoin until the $30,000 level. It is proving to be a test of endurance for a lot of investors. As of January 2022, investors who could not take it anymore had sold their digital assets in a selling spree that further saw the prices of crypto drop even lower. In the last few days, about $130 billion had been erased from the crypto market. What's the reason behind this dip? It's a bit difficult to pinpoint the exact reason for the dip, but analysts have come up with a number of possible reasons. From the fall of Bitcoin to the downward trend being experienced in the stock market since the beginning of the year, we have picked a few reasons that are weighty enough to warrant the crypto dip being experienced. The U-turn by car maker Tesla on accepting Bitcoin has been floated as one of the reasons for the dip that we are currently experiencing. Back in March 2021, Tesla CEO Elon Musk tweeted that the car maker would be accepting Bitcoin as a mode of payment to purchase the electric vehicles. Although this provision was only possible in the US, Musk stated that plans were underway to roll out this payment method to other countries. Musk would later come out in May to state that Tesla would no longer be accepting Bitcoin as a mode of payment. The reason behind the backtrack? Musk blamed climate change as the driving factor behind the company's decision to stop accepting the digital asset. Musk stated, "Tesla's mission is accelerating the advent of sustainable energy. We can't be the company that does that and also not do appropriate diligence on the energy usage of Bitcoin." He further said, "We are concerned about rapidly increasing use of fossil fuel for Bitcoin mining and transactions, especially coal, which has the worst emissions of any fuel." Another reason for the huge crypto dip can be traced to the Asian economic powerhouse that is China. In 2021, the country made headlines when it banned cryptocurrency in different phases. China started by banning financial institutions from engaging in any crypto-related transactions before it dropped the axe on all domestic crypto mining in June. In September, the People's Bank of China dealt the final blow when it banned all cryptocurrencies. The Monetary Authority gave a stern warning that cryptocurrency transactions originating outside China will also be considered to be crimes. This was a major hit to the crypto market, considering that China was the leader in mining for cryptocurrencies, accounting for more than 70% of Bitcoin's hash rate. Just like Musk, China stated that it was concerned about the negative impacts of crypto mining on the environment. According to experts at the University of Cambridge's Bitcoin Electricity Consumption Index, in a single year, the entire Bitcoin network guzzles around 120 terawatt-hours of energy. This is more than the amount used by the whole of the Netherlands. It was also determined that Bitcoin mining activities in China alone were bound to produce about 130.5 million metric tons of carbon dioxide by 2024. This amount is almost the same as the total annual emissions registered in the Czech Republic. China also stated that people were increasingly using cryptocurrencies to engage in illegal operations such as fraud and money laundering. However, China cunningly started pushing its own digital currency known as yuan currency. China's action saw Bitcoin prices drop below $30,000 in a dramatic fashion. Malaysia has also taken a strong stance against Bitcoin. In July 2021, authorities in the country seized around 1,100 Bitcoin mining rigs and laid them out in a parking lot before crushing them using a steamroller. This was after the authorities acted on a tip-off that the miners reportedly stole $2 million worth of electricity tapped from Sarawak energy power lines. The claim by the Malaysian authorities further tainted Bitcoin and the entire crypto platform as a power-hungry venture whose participants may go to any length to reap benefits. In January 2022, Russia also joined the list of countries that are planning to impose a ban on the use and mining of cryptocurrencies. This was after Russia's central bank floated the idea, citing threats to financial stability, Russians' well-being, and the country's monetary policy sovereignty. The bank's statement read in part, "The spread of cryptocurrencies could make people withdraw their savings from the Russian financial sector and subsequently decrease its capability to finance the real sector and potential economic growth, reducing the number of jobs and potential for household income increase." Russia also argues that the digital assets could be used in money laundering or to finance terrorism. The bank proposed preventing financial institutions from conducting crypto-related operations and proposed the development of mechanisms to block transactions aimed at buying or selling crypto for fiat currencies. As is the case with Musk and China, Russia also criticized the tendency of crypto to consume a lot of power. According to the bank, Bitcoin and other cryptocurrencies are mined by powerful computers that compete against others hooked up to a global computer network to solve complex arithmetic problems. The process consumes a lot of power and is often powered by fossil fuels. The best solution? The bank said the best solution is to introduce a ban on cryptocurrency mining in Russia. Other countries that have banned cryptocurrency entirely include Tunisia, Bangladesh, Algeria, Bahrain, and Bolivia. Cryptocurrency enthusiasts are also crossing their fingers after reports of a looming move by the U.S. government to regulate crypto operations even more. It seems that President Joe Biden's administration is going all out on crypto traders. This is after the president signed into law the $1.2 trillion bipartisan infrastructure bill. The bill features tax reporting provisions that are bound to impact digital assets like cryptocurrency and NFTs. Let's look at some of the provisions that may be part of the triggers of the huge crypto dip. One provision of this law makes it mandatory for brokers, who in this case are the exchanges, to declare their cryptocurrency gains in a Type 1099 form. The exchanges will also be expected to disclose the identities and addresses of their customers. This provision has received backlash from cryptocurrency advocates who argue that the current language used could potentially target those who have no customers who wouldn't have access to the information that is needed to comply with the new regulations. Although the Treasury Department came out in August 2021 to clarify that it will not target non-brokers, the head of tax strategy at CoinTracker, Shehan Chandrasekhara, said that this bill is bound to impact cryptocurrency investors negatively. Biden's administration is also tightening the control on crypto trading further by requiring crypto exchanges to send a Form 1099-B to both the Internal Revenue Service and their customers. The customers will be required to use the information form from 1099-B to determine their preliminary gains or losses, which they will then report on their own tax returns. However, Chandrasekhara still argues that these forms may still be inaccurate, since these exchanges can't determine what their customers have in their self-custody wallets, nor can they snoop around to see what the customers are doing in decentralized finance applications. The infrastructure bill will also require businesses and exchanges to file a report with the IRS when they receive more than $10,000 in cryptocurrency. The report will have details such as names and social security numbers. To show just how serious this regulation is, the government has stated that failure to do so will be considered a felony offense. Now, although the provisions of the bipartisan infrastructure law will not take effect until January 2024, its effects have already started being felt. For example, after President Biden signed the bill into law, Cardano's price took a steep dive after recording impressive growth over the last few months, which even included several all-time highs. The crypto dip that's being experienced is now becoming a concern to a faction of investors. However, it's only the beginning of the year, and volatility in the cryptocurrency market is something to be expected at any given time. Do you think the dip will last longer, or will the crypto market recover soon? Let us know in the comments section below. Do not forget to subscribe to our channel and turn on the notification button for more informative videos. Till next time, stay safe.